The energy shocks are occurring globally. What are the consequences? This discussion relied heavily on the opinion of Nouriel Roubini, a well-known economist. If you look at energy prices for the last year, they've gone up sharply for oil, for coal and natural gas. They are up 95% compared to a year ago. Dubai Oman, that is the oil from the Middle East, is already about $80 per barrel. And according to some analysts, it might even reach $100 a barrel by the end of this year 2021. According to CNBC, the West Texas Intermediate crude futures topped $80 on Friday the 8th of October 2021 for the first time since 2014. Oil is up more than 60% for 2021 as demand rebounds while supply remains tight. The U.S. Department of Energy said Thursday the 7th of October 2021 it has no immediate plans to take action to alleviate the price surge. We're seeing energy shortages in the United Kingdom, in Europe, in China, in India, in many emerging countries and developing economies. According to the Wall Street Journal, as of the 20th of October 2021, China has started to take the brakes off coal production to tackle power shortage. We're starting to see rising gasoline prices also in the United States, and now the prices of other energy sources are rising. Both countries and consumers are hoarding energy because of shortages, and it's leading to higher prices given that inventories are limited. As a result of these shortages, we now have higher prices given that inventories are limited. Now, what is driving this rise in energy prices? I will argue that part of it has to do with the global climate change. There is now a huge political pressure to decarbonize and to move away from fossil fuels that are polluting the environment. And for the last few years there has been a massive underinvestment into new fossil fuels because of this political pressure. This became worse during the COVID crisis. Financing of new coal projects and indeed all fossil fuel projects is not available. Even the big oil companies that could self-finance these investments are now indicating the pressure from shareholders is such that they have to move away from coal, from gas, from oil. So we now have a massive underinvestment in fossil fuels projects. In spite of the higher prices of natural gas, shale gas producers in the U.S. are also facing financing constraints. These shale and natural gas producers have been badly affected many times in the past because of price instability. At other times some went bankrupt. So they are more cautious about ramping up production and rigs, even with the higher natural gas prices. Then there is politics and geopolitics for a number of reasons. OPEC may not be willing to raise supply enough, which limits output as such supply can't be raised well enough. Russia may be playing political games with Europe on the supply of natural gas. They know they can put pressure on the Europeans for political reasons. And the prospects of an agreement on the nuclear deal between the United States and Iran seems to be slipping away. Iran has a massive crude oil supply capacity. If there was a new nuclear deal, maybe Iran would be allowed to produce and export oil. Today it is not allowed to do so. But the prospect of reaching a nuclear deal that can improve crude oil supply looks quite far, and therefore the supply from Iran may not come back on the market anytime soon. So supply of fossil fuels in relative terms is falling. However, the supply of green and renewable energy is increasing, but it's not increasing fast enough to compensate for the relative fall in the supply of fossil fuels. Moreover, the cyclical and seasonal nature of renewable and green energy sources means that they are not that reliable. A more pragmatic approach to a world where we rely more on green and renewable energy is to ensure we have fossil energy as backups. This is because renewable energy sources require massive storage facilities that should serve as backups, but these storage facilities are in limited supply. So on one hand we have a growth in the demand for energy because of the global economic recovery, but the supply is not recovering fast enough, because the supply of fossil fuels is in relative decline but the supply of green energy is not rising fast enough. This puts upward pressure of course on prices. It is a source of headline inflation, and like in the 1970s it could eventually lead to stagflation. The other constraints, I think that is important here, is the following one. If you're serious about decarbonizing and you want to incentivize people to move away from fossil fuels towards renewables, then you have to impose carbon taxes, meaning you have to make it expensive to consume now cheap fossil fuels. Yet imposing these carbon taxes at the level necessary to switch from fossil fuels to renewable is politically mission impossible. In most economies of the world, energy prices are already high. Would you want to impose a 50% carbon tax? It doesn't look politically feasible. So the high energy prices is causing insecurity and people are unhappy about paying more for fuels. If you add carbon taxes to those prices, then it may lead to outrage if not untold penury. Therefore the energy transition is going to be slower than otherwise,